The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 31st. How about that, folks? We've made it through our first month of the year. It is the January 31st fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call the 7 Great Laws of Life. You know, we've all heard of the 7 wonders of the world, those being the Great Pyramid of Giza, the Hanging Gardens of Babylon, the Temple of Artemis, the statue of Zeus at Olympia, the Mausoleum of Mausoleus, the Lighthouse of Alexandria, and, of course, my favorite, the Colossus of Rhodes. How did I get in there? I'd like to know that. Well, there's also what I believe to be 7 great laws of life, and they are the more one works and plants, the more one can harvest. Secondly, the more good one can do, the more success one can achieve. Thirdly, much in life depends upon our view. Our view, folks. Number 4, one stone overturned, guess what? It can become a stepping stone to the next discovery. How cool is that? Number 5, whatever we choose to focus on, good or bad, our mind can expand. Think about that one. Number 6, things will happen around you, things will happen to you, but the things that really matter, are the things that happen within you. And finally, number 7, choose to do what you can, where you are, and with what you have. Folks, the truth is there are more than 7 wonders of the world, because I didn't mention the Great Wall of China, Petra, the Colosseum in Rome, Machu Picchu, and of course there are more than 7 laws of life, but these 7 will keep you on the path to success. Now, let's go find 7 wonders in these markets that we trade out here, as they're all over the place. Right now, you've got Dow Futures trading down 143 points. They're trading out at 15,590. S&P futures off 15 points, trading at 1766 right now. NASDAQ futures down about 13 points, trading at 3489. Russell 2000 off about 12 at the 1117 area. King dollar back, or not back, King dollar up about 13 ticks, trading at 8132. Some movement in the currency world out there. Hard currencies, you've got Goldilocks up about $9, trading at $12.51. Silver up 22 pennies at $19.35. Light sweet crude back 75 cents right now, trading out at $97.49. Natural gas is back about 4 pennies, trading at $4.97. A quick peek around the globe. It is a sea of red out there. Yes, I'm referring to the Red Sea. Over in the Nikkei last night, down 92 points. The DAX in Germany right now, it's off 168 points, down nearly 1 8/10%. The FTSE down 1.5%. It's off 96 points. Our call-in number is 877-927-6648. If you give me a call, folks, I will be happy to look at your stock chart, answer any question that I can. So what do we have going on here? Boy, so where do we begin? So much to compact in 1 hour. First, let's take a look at the euro, Japanese yen. We must take a look at our favorite currency pair, because its directional correlation to the U.S. stock market is just better than anything else that is out there. Now, what has the euro, Japanese done as we have begun this half-hour session? Well, it's actually kind of cool. Sort of cool out here. We would have liked to have seen a bullish candle configuration, but we didn't get that. Let's see what we do have. Number 1, the euro Japanese yen most recently made a 0.618 Gartley sell pattern. Did that with a little wide-ranging bar at 1730, so that was 5:30 in the evening on January 28th. Then you did get some bearish reversal signals right out here. Here was your big one. That came in at the time frame of about 3 a.m. January 29th out there. Nice bearish engulfing candle. In any event, he had a 0.618 Gartley sell pattern. Now, the ultimate outcome of any Gartley pattern, as you know, is that it forms the C point of an A to B equals CD down, and that's exactly what has taken place thus far. That A to B equals CD down, that's the fifth outcome. Gotta like it. 7 wonders of the world, 5 outcomes of a Gartley buy or sell pattern. That fifth outcome, 1 to 37, 97 is the number. What number did we hit as we came into this 9 o'clock hour? 137.975. How does that work, folks? Now, does that mean that's where price is going to stop? Unfortunately, it doesn't. What it does tell us, it would be more helpful if we saw an actual bullish reversal sign. And just because that candle has a little green body, that does not mean that it is a bullish reversal sign out there. So it's achieved its outcome. The problem is an A to B equals CD only completes a 1-to-1 pattern 60% of the time. The other 40% it goes and it extends itself. In this case here, the extension of this pattern would take it down to about the 137.08 type area. So we're going to be paying attention to what the euro, Japanese yen is doing. So if you were wondering what the markets were doing, what it was that was pushing the markets lower, look, these markets are controlled by currency, and currency. So you need to know what's going on with the currency pairs. You don't need to trade them, and you most certainly want to know what's going on inside of the euro, Japanese yen. So this is an important area, this 137.97-ish range for it to hold, because if it breaks, there she blows, and she'll be blowing down to the downside out here. Now, we're going to switch from the euro, Japanese yen, so we got an idea of what's going on there. Now let's go take a look at weakness in the marketplace, and we're going to switch over to a 120-minute chart here for the Dow. Now, we take a look at the 120-minute chart here for the Dow. We're going to take a look at two different things that are going on here that may be slightly bullish out here. That is, let me see, what did this get up to? Just need to see what that relative strength got up to. I don't have it marked on my, let me put my data panel up here. Make sure it didn't get above 60. So it did not get above 60. Alrighty. So we're going to take a look at number one. If I put this chart up on my screen here, just so you got an idea here, we've got this little price relative strength divergent pattern. Now, we have the one that worked yesterday. Yesterday we had, let me get the crosshairs going out here. If you are watching this on TigerTV, thanks so much for doing that. I'll do the best I can to explain. Everybody listening on TFNN.mobi as well as the radio out there. And we did have a price relative strength divergent pattern that was confirmed right here at midnight at 2 a.m. This was yesterday out here. And then, of course, price went ahead and moved higher inside of the Dow. Now that area, that pattern has failed. We still have a price relative strength. So we got price moving lower on less relative strength out there. We do not have any kind of bullish reversal signal. But what we do also have that is forming, let me go ahead and erase this off of my screen out here, because we'll just show you how you actually go ahead and do this. You may not have the same tools, but you've got some tools that you can do this. Now, if we come off of the high here from December 31st inside the Dow futures, you're up at a price level of 16,540. That's your A point. Your B point is the low that was put in at 4 o'clock in the afternoon on January 13th. Makes what looks like about a 0.786 retracement into the high at about 10 a.m. on January 21st, gets up to 16,489. Now, what's actually transpired, just as we were taking a look at the euro, Japanese yen, we've seen a 1 to 2.618, A to B equals CD on the way down. That price projection for the Dow futures, 15,547. Hey, it didn't hit 15,547. It hit 15,550. That's pretty darn good. Now, the problem is that, here's the problem. If you take a look at this waterfall, this little cascade, this has been jumping off of Niagara Falls like if you were in a barrel out there, and that's not a good thing. That's not a good scene. I can't tell you that price is going to stop here at the 2.618 level. What I can tell you is that you've got prices moving down on less relative strength. So that is that's a bullish sign out here. However, we have not seen the bulls arrive here to try to save the day, and that is very key. So we've got that going on. We've got a 1 to 2.618. That's a big stretch out there. Hey, the next level is nothing more than pi 3.14, and that is that's a level that most certainly can be achieved. Now, what other pattern is it that you see out here? Well, I erased it, so that really wasn't necessarily fair out here. But inside of the Dow futures, if we take a look at exact time cycles, I'm going to use this little cycle tool that I have. And I'm going to start with what is the first drive to the 3 drive to a bottom pattern that may be forming inside of the Dow. The drive number 1 at 2 o'clock in the afternoon, January 27th out at the 15,722 level out here. The second drive coming in at 4 p.m. This is on the 29th out here. That was at a price level of 15,643. Now, the actual 3 drive, if this is going to be symmetrical in time, would actually take place at today's close. It would take place at today's close. So there are our 3 drives to a bottom. Now, if we just take a look at this, because you don't have that tool, if I do an expansion of swing points, if I go from that low at 2 o'clock in the afternoon down at this 15,722 level up to the high that was put in at 8 p.m. on January 28th, you'll see it was an exact 1.272 expansion out there. So that's of the first drive. So it had that nice Fibonacci correlation. Now we got to take a look at, ideally, the second drive would also be, or the in essence, the third drive out here would also be a 1.272 expansion. You can see we're just slightly below that. That doesn't mean that it's a failed pattern, but it does mean that if price gets below 15,518, let's not even be paying attention to this pattern out here. But pretty close. We've been down to 15,606 out here, but 15,518. And that could take place here coming into the close today. What the Dow futures could actually be forming here is a very nice 3 drive to a bottom pattern. It would look like this, and that's a very important reversal area inside of the potential reversal area. Now, the other key here with regard to the Dow, because it's the weakest, is that if this pattern really doesn't occur, or let's say it does occur and it fails out there, boy, it tells you we've got lower prices coming at us. So we've got the patterns out here to truly be paying attention to. There's more wonders of the world. We get back, we'll go take a look at those as well. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Request hour is in. Had a request earlier or late last night to take a look at ticker symbol TC. TC is Thompson Creek Metals. They engage in mining, milling, processing, and marketing of molybdenum products in the United States. Folks, if you've ever been through the mines, or if you've ever been driving between Denver and, say, Vail or something like that, you can pass a bunch of these mines out there. Maybe it's not even a Vail. Maybe it's between Vail and Aspen, but you see some pretty large mines out there. Now, molybdenum, it's the 42nd element of the periodic table. It's a little silvery metal, 6th highest melting point of any element, so it's a very strong product out there, very strong element, and it's used a lot in manufacturing, space exploration, military, things of that sort. So when we take a look at it, even though it's a mining stock, you don't want to be taking a look at this with regard to what's going on with regard to gold or silver out here. You just want to be able to take a look at this on its own. So I've got a couple of different charts that we'll take a look at. Number one, first, we've got the Rhodes Momentum Indicator up here. We see that this thing changed into, actually gave you a buy signal. Let me find my crosshair out here. Need that little crosshair. It gave us a nice little buy signal right here on the trading session, December 24th, December 26th out here. And it had a nice little, that was your buy signal. That was a change in trend in TC out here. Then you had a nice little sign of strength, a nice big rising window, a nice big gap up on January the 15th out here. Let's go take a look at the volume behind that. So you have a nice little breakaway session. You can see that level has been tested out here. That's that gap. That gap away took place on January 14th. Volume of 8 million shares. The first test coming back into that level out here was on the trading session of January 27th, 2 million shares going against 8 million shares. Yeah, I don't think so. Can't break it down. So it's only been tested once, meaning the 250 area out here. So if you're looking for an entry point into this equity, I'd have to say 250 would be the place where you would start looking. You would want to now see, I would say your benchmark here would want to be instead of the actual breakaway session, you'd sure like to see it testing again on less volume than that January 27th area. So that had 2 million shares. Yesterday came back and tested the high of that, as an example, was 686,000 shares. So this is, I know that the person that asked me about this was looking for a entry point into this, and so that looks pretty good right around that 250 area. Remember, the gap could always be filled, so that says your stop's got to be below probably 218 out there. And now with regard to what's nice about this little sign of strength. So here's a nice thing about this little equity here, is that this could be forming a very large A to B equals CD up. If you come off of the lows here, December 19th out at 172, move all the way up to the highs on January 7th at 304, and pulled down to that first test of the gap back on January 27th. 378 is your 1-to-1 A to B equals CD. That takes you to your 100% move of a move, gets you back to the August 26th high out here. So that is in Thompson Creek Metals out there. I had a request to go take a look at the VIX index. We'll take a look at it right now, but let's really take a look at it after the market opens out here. Right now, what we can say is the VIX index well above the 50-day exponential moving average. A lot of carnage is done to a market when the VIX index is above that level, because the way that I look at the VIX is nothing more than a liquidity indicator. And when the VIX is below the 50-day exponential moving average, it's telling you there's plenty of liquidity in the markets. And when it moves above that level, now, I can't tell you whether that's the right way to use it or not. I can tell you it's how I use it. And when you go back and you take a look at what happens on a chart, you can say, hey, it works PDG, pretty darn good out there. Right now, the 50-day exponential moving average on this is 14.15. So we'll take a look at the VIX again after the market opens out here. In the pre-market, boy, we've got things moving. You've got Google trading up right now. Let me see, where is Google's trading out at $11.75. That is up $58. Yeah, $58 out here. No, I got it. I'm sorry. Let me take that back. It's trade. I was looking at Chipotle. Google is trading up $38, up 3.5%. On the other hand, Chipotle, that Mexican restaurant out there, is nothing wrong with Mexican restaurants. It's that how can a fast food restaurant be trading at $552 a share? That's the mind blower. Nonetheless, it is. It's trading up $58 right now. It's trading up nearly 12%. Amazon down 7.5%. It's trading off $30. So we've got a lot of movers and shakers in the market. Speaking of movers and shakers, how about Goldilocks? Let's go check in real quickly here, see what Goldilocks is doing. Gold trying to get back above that trend line, but that trend line has now stopped it in its tracks. It's trading out at $12.51. Boy, it needs to get above that trend line and needs to do it quick. 877-927-6648. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 182, trade out at 15,667. It was 666, but that was a little devilish looking. The S&P down 19, trading at 1775. Composite off 43 points, trading at 4080. Russell 2000 up 14 points. The leader in the clubhouse percentage-wise, off 14 points, trading at 1124. Apple down $2. Microsoft up 62 pennies. Google up $25 right now, trading out at 1161. Google is the leader in the clubhouse to the upside. The UVXY is the second leader. So speaking of the VIX, we'll go back. We'll take a look at that here right now. The UVXY up 16% here this morning, so you can see that big gap up into this last previous swing point high from January 27th out here. You've got Proof Point Inc. up about $4. You've got Wynn Resorts. I believe they were out with numbers before the bell, up $3.50. They generated revenues of $5.6 versus $5.1 billion. And from an income standpoint, looks like I don't see it. I just see the revenue number times. Amazon is off $34. Celgene down 5. Mattel off 10% this morning, down $4.60. Rocket Fuel, F-U-E-L, up about 7%. U.S. Silca Holdings, SLCA, down 14% this morning. Chevron off 3. MasterCard out with numbers. They're down about 6% here, off $4.47. They had operating income of $920 million versus $899, and beat the top line on the revenue side as well. Fourth quarter revenue $2.13 billion versus $1.89 out there. Let's go check out some of these equities here that are popping and dropping. Let's go see what they're doing, what's going on from a volume standpoint. We'll start in the upper left-hand corner. Let's go take a look at Mattel. Mattel here today, down with volume. Nasty looking here. This thing is down below. Let's pull this back further, see where this thing is now headed to. Below, gapping down below swing points out here. Last set of swing points being the October 8th time frame was a low of $40 even, Stephen, here at $38.50. That had volume there of 6 million shares. Well, shoot, only been trading for 6 minutes, but Mattel has already done 1.7 million shares, so it's got some volume. So where's this thing going to be pulling back to? Man, oh man. Mattel looks like it's going to come back to this sign of strength out here, which took place on July 17th, 2012. 2012. Boy, it doesn't take long to take back a lot of shekels out there. That low is 33.19. The high is 34.59 out here. Volume on that breakout session, 13 million shares. It could easily come back and close that gap That would be down at the price level about 30.91 out here. So that is on Mattel. Its next real set of swing points, since they're so close to that breakout there on the daily chart, I would have to say that is most likely where it would head to. Let's go see what else we've got moving volume-wise, see how things look. Let's take a look at MasterCard. MasterCard chart does not look too bad here just yet. However, it is trading below a B point of an A to B equals CD down, which was January 27th. That was 13.7 million shares. Price level 74.95. You're at 74.72. It closed below 74.95. And what you're looking at is let's take a look at that A to B equals CD on the way down out here. Yesterday had a pretty nice move from a volume standpoint on the move up, but today is looking like more volume to the downside. So 70.79 would be your one-to-one. I'd have to say you're in the range of 68.11 to 64.74, and that is on MasterCard. And, of course, MasterCard is, well, here you go. It's trading below right now its last sign of strength, which was on December 11th. That was 25 million shares. So if MasterCard is unable to hold this swing point low, it actually says look out, because it could easily move down into the July 31st area, which is around the $60-ish type range out there. So that is on MasterCard. Let's take a look. Let's see what else. We got Chipotle, we got Google, we got all kinds of Amazon. Amazon right now, Amazon is trading out at 366. This had big volume to the upside yesterday, 10 million shares. So far here, 2.2 million shares in the first 8 minutes of trading. Amazon should come down and try to test its last breakaway gap. That was October 24th, October 25th out here. So anywhere between the level of about 332.65, I'd say, to about the 344-ish range is where Amazon ought to trade to. Let's go take a look at Google, see what Google is doing here this morning. Google selling off, meaning it gapped up this morning here, got above its most recent high, since then has sold off. The high out here was January 22nd, 1.5 million shares, but it's already done 876,000 shares out here. So you could see Google actually set up a high volume high today, even as it trades lower, which says that Google would not be done up at that 1172-ish range out there. Let's take a look at Chipotle. Let's see what Chipotle is doing. CMG is the ticker symbol. That is up, trading out at 557. That is up towards its session highs thus far. Taking out a swing point here from November 18th, 274,000 shares. You are up and above that with 249 already. So this is setting up a to B equals CD to the upside. Man, oh man, that could be just one heck of a doozy out there when you take a look at Chipotle. Let's take a look at maybe a larger one and see what the larger one has done here from a time frame standpoint. Even the larger one is just absolutely huge. It's going to hurt. It's hard. Let me see. Did this thing actually take out its weekly swing point with volume 3.6? Certainly did with wide price spread. Yeah, it most certainly did. Let me refresh my chart here, make sure I'm getting the accurate data. But I just hesitate. I hesitate to say what this A to B equals CD is, because it just defies the laws of nature out here, but it may not defy the laws of A to B equals CD patterns. This says that Chipotle wants to trade up to 630, 853. Really, it says it wants to move up to about 750 out there. Oh, my goodness. Let's go to Pat in Framingham, Massachusetts. Pat, thanks for calling. Thanks for holding. How are you this morning?
I'm well, thank you. Good morning. I have a question about AEM. I get Tom's letter, and I'm wondering if I should stay in over the weekend or should I get out?
Well, I would have to say I would follow his advice. And if he's not telling you to get out, I don't know that I would get out. I mean, it looks pretty... If you take a look at what AEM is doing, the reason that you would consider getting out would be, tell me what your fear is, so that I can try to address that.
Well, it's volatile. It's been up and down all over the place, and I just don't know which way it's going to go.
Okay. Well, and to a certain extent, I don't know which way it's necessarily going to go. Let me tell you what it's doing here. And what it did here 2 days ago, which was on January 29th, you had 3 million shares moving into a swing point that had 2.9 million shares. It didn't test the highs. It stopped just before it. That's really nice. So you like to see that, Pat. So it didn't actually, get up there and get up over it. So you don't have a failure. You're still trading inside that swing point, which I'm looking at is October the 28th. And so if I take a look at what's going on maybe relative strength-wise, it's not even over bought here just yet. This thing could easily be setting up an A to B equals CD pattern. In the case of AEM, that would take you to that price projection would take you to about $33.06. At this stage here, I'm not seeing any reasons to sell. I would just ask that you keep your stop in place out here. What AEM may do is find some resistance out here. It had a gap down, and there's a resistance line that is out here, and that resistance line will take you right into about the 33.92 level. But if it gets above 33.92, and it can do that with more than 2.5 million shares, and that's the beauty of the way that it's trading right now. When you take a look at the volume, from 2 days ago, take a look at the volume from yesterday. It pulled back with 2.5 million shares, but it had gone higher the day before with 3.1 million shares. So I do like the way this looks out here. I don't know what Tom is suggesting for you inside of AEM, but I can't find a reason to tell you to sell it.
Oh, thank you so much. That's what I needed to hear. Okay.
Okay, perfect.
Thank you.
All right. You
Bye-bye.
betcha. Have a nice day. All right, now we've got the Dow is off 202. The S&P is down 19 points right now. Let's take a look here at futures-wise. You're at 1769 in the ES Mini out here. Let's take a look at, so much to do, so little time. Let's take a look. Let's take a quick tour here of what's going on the monthly charts, because the month is coming to an end today. And if we do take a look here, we start with the S&P 500. Nasty looking chart. Unless there's some huge rally out here today, which would take the S&P 500 somewhere up above 1806.55, and you're at 1775 out there, and anything can happen, folks. So just stick around. But right now, you've got a bearish engulfing candle out here. In fact, quite frankly, if you close below 1767.99 out here, that is a very nasty sign out here inside of the S&P 500. What does that say? I tell you what it signals to me. It says the S&P 500 probably pulls back to 1576. Remember, we used to talk about that 1576 until you were blue in the face, because I was blue in the face. Was that the number we were talking about? Yeah, it was 1576, the high from October of 2007. Unfortunately, if we get that type of a close today, 1576 is going to be coming back in vogue. 1576 to 1550, and that is going to potentially be the next buy. Now, look, there's some other support areas along the way out here, and it needs some follow through. But on the S&P 500. And it doesn't say to me that this is the move that's over. It says we're still in a bull market out here by every means, and it means that we're going to get a retracement, maybe even a scary one that you'd want to end up buying out here. But, however you take a look at it, trend lines, channel lines, or what have you, this is still a nice bull run that is in place. And coming back to that support level, that breakout level, of that consolidation pattern, well, it quite frankly would be normal. So that's what we should be. That's what the S&P. That's the message of the S&P 500. If we take a look at the message of the Dow here is actually giving you that message. Here's the monthly chart. Shows a number of different patterns out here. One of those being Larry's 5-wave reverse point pattern out here. Well, as I say, with any tactic that you use in the marketplace, you want to make sure you have a strategy, and the strategy is, what are the bulls and bears telling you? Well, you now have a strategy that the bears are saying sayonara, because you've got a big, huge, bearish engulfing candle out there, about as big as it gets inside of the Dow out here. Where is that going to pull back to? I would have to say the Dow most likely would also pull back in that October 2007 area, right around the 14,198 level. You're at 15,627. So maybe it's the first one down that then rejects October of 2007, as where the market tries to settle in. That is on the Dow. Now, here's going to be the important one on the monthly chart. That's going to be the NASDAQ composite. Where this finishes today is very important out here. If we take a look at it, because right now it's not given. So, here's where you got the dynamics of what is going on in the world. And the dynamics out here are this. And that is that you still don't have a bearish reversal signal right now inside on a monthly chart for the composite. And in order for it to really have a significant, that bearish engulfing candle, that's important because a dark cloud cover, it's okay, but, it's just okay. So watch for the composite because you get a real bad close today. If you do, on the composite, what you're looking for is a close below 4,065, 4065.66 out there. If you get a close below that, now you're going to have across all of the indexes on a monthly chart out here, bearish reversal signals. And that says that you've got some pretty significant resistance. It says you on a monthly chart for long-term capital, it says really start to make sure you now have some stops in place. Absolutely some stops in place, because inside the NASDAQ composite, I would say on the pullback here, it will probably be the signal coming from the S&P or the Dow versus the composite here. But here's where we have the tale of two markets, because if you don't get the bearish reversal signal here in the composite, it says we've got some inconsistencies out in the market. Let's go to Ken in Sarasota. Ken, thanks for calling, thanks for holding, thanks for listening. How you doing today?
Good so far.
Excellent. Glad to hear that. Well, let's keep it that way. All right.
Sure.
All right.
The question I have for you is TLT.
All right. Tell me what you're doing and how I can help you.
Well, I'm long at around this level.
Okay.
So I was underwater, and it came back nicely, and now I'm wondering whether I should cut some of the position, close it, or wait to see what happens next.
Well, if we take a look at the TLT, which is, I think that is correlating to the 20-year bond out there versus the 30-year bond. Ken, can you do me a favor? Hold on through this break here.
Sure.
Absolutely. All right, we're going to go back out to Ken. We're going to take a look at the TLT. Right now, the Dow is off 189. S&P is off 18. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Out to Ken in Sarasota. He's taking a look at the TLT out here. So, Ken, are you watching us on Tiger TV by any chance?
Yes, I am.
Okay, perfect. So let me tell you the screens that we're looking at here. First, we've got the Rhodes Momentum Indicator screens up here, and on the top half of the screen is the weekly chart. The bottom half of the screen is the daily chart. Now, on the weekly chart, you've had some very strong bullish signs at the lows that are out here, and you're today, this week here, you're about to get a very bullish crossover out here. That's where the solid blue line is getting above that little dash line out there. So you're getting a nice sign of confirmed strength out here. As we take a look on the bottom of the chart, all these little red boxes, don't worry about what the letters are that are inside here. This tells us that buyers have been in control of the 30-year Treasury on the daily basis out here. So we have not seen any sellers at all having any control inside of the 30-year Treasury. Now, what the red line that's going to cross my screen out here is probably one for you to truly be aware of. That is the 200-day exponential moving average. That's at about 134.52 right now. So you are very likely to run into some resistance there. And I'm just going to report to you, what it is that I see out here. I would say that might be the extent of the move that you actually get, and you're at 133.25. I would say if you close below 132, 132 today, I would be certainly looking at closing out the trade out here. We have not seen the 30-year Treasury trade above the 200-day exponential moving average since May in 2013, so it's been quite some time out here. The other thing that is going on, so you got 134.52 as one area of resistance. If you take a look at what's going on out here in bonds, it was traveling in a huge consolidation. This consolidation took you back to August in 2011. It broke through that consolidation. Now, here's the bullish side. If you're taking a look at the descending price channel, those are the black diagonal lines going on my screen. Not only did we see buyers take control of the 30-year Treasury, but it broke with conviction. This was on January 10th. It broke that descending price channel. Now, it never really came back to test that area. This is a daily chart that we're looking at, so that's not necessarily the greatest sign, but still, nonetheless, it's still positive out here. And it says to me that this is going to run into real resistance at the bottom of that consolidation area, and that's right around the 135 level. So I think we got the 200-day exponential moving average and everything kind of lining up with that. If you were a follower of Basil Chapman's Chapman Wave and you were doing your peak counts, I can tell you that coming off of the low here at December 31st, you are now into your what he would call your peak E, your fifth peak out here. I do not see a bearish reversal signal yet inside of the 30-year Treasury, but I don't know what you were trying to when you got into the trade. What were you when you got in this trade? Were you looking at the 135 level, 134.50-ish level as being an area of resistance, or because maybe there's something else that you're looking at that I should take a look at, on your behalf?
What you're saying makes a lot of sense to me. I was looking actually at the 200 exponential on the TLT itself, which I'm showing at 108. And we just peaked above it this morning, and that's one of the reasons why I was calling. So same as what you were saying, I was thinking this looks like it could be resistance here. Maybe it's time to bail for the moment and see what happens, and maybe pick it up again if it looks like it wants to just reset and start moving back up.
You're absolutely right. I mean, the TLT, it's trading just slightly above that 200-day exponential moving average. It's always important when you're trading these types of ETFs to make sure that you pay attention to what the underlying instrument is versus the actual ETF, because there's adjustments there that you have to account for. So, Ken, I hope that really helps you out.
Yeah, that's fine. Thank you very much.
Absolutely. You have a great weekend, a great Friday. Thanks so much for calling. Folks, stay tuned. The Nadex Bull Bear Binary Option Hour is up next. Have a great weekend. I look forward to picking things up again with you in February. That'll be Monday morning. Take care, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.